Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. Wavy here as always. Yep, still working with that 900 level. Actually, right now, post 899, little pop-up after hours sympathy trade with Amazon. Dan Jet, welcome, welcome, welcome. Hey, hey, thanks, Amazon. I don't think this Amazon thing's going to last. I don't think this is. Uh, Shucked the Nas, huh? Hello, sailing. Nas futures up 2%. Yeah, I think, we just got this end of day pop. Again, looking at Amazon's guidance, looking at the one time Rivian, looking at, especially the guidance, even their operating margins are getting more and more narrow. Not to beat on it, but the market's good. Why is that in the Tesla live stream? Because you have stuff that we're in a macro environment. And if we pop the NAS, look, I mean, why was Tesla up after hours? It was up bigger than this after hours uh because of sorry, one of my dogs was yelping. Because Amazon's up big, you have a bunch of stuff up big, even things that weren't on earnings. And Snapchat up 40% based off their earnings, and they did beat, but stuff just roll over. By the way, Amazon, this came out after growth percentage, revenue growth percentage. I mean, that's not a strong trend, and that's taking into account everything. I think this is just a blatant markets. We're going to get a huge discount and then pop. No, Ford sympathy. I mean, Ford missed, but I actually think Ford's overvalued right now and needs to come easily back to its 200. So where do we sit with Amazon? Amazon bucked most of the trend today. You had the gap down, little rally up, and then rolling over into the close. So it's still fighting with this 4 hour rotation zone. And long term, I'm going to reiterate this because there's not a lot of counterpoints to Amazon out there. And the probabilities based off this massive double top, it's over 70% that we see much lower prices. I'm going to bank. So, I'm going to bank with the probabilities. That's where I'm going with this. So, and my point is, and it really worried me this morning, and I not just, I'm not going to name the person who's got a bunch of money in Amazon, probably everything, but on one of the live streams. I've talked to too many people, and separate from this live stream, that have like literally they are in one stock, Tesla. And I see routinely the Tesla, there's a lot of people who pump it all the time, a lot of people who have it in their funds. It's like, okay, you have a bunch of other stocks and all you can talk about is Tesla. All right. And that's one of the things that worries me because people a lot of times get one side of the stuff, and just from a technical perspective, it favors lower prices. And I want to know if let's say we hit the full target and return back even to where it was in May of last year, how many people can withstand that kind of loss? Okay, that's what I want to make sure of, because if you're all in with one stock, and let's say your average price is 900 where we're trading now, can you withstand it back to 600? Can you take that? And there's too many people out there that is buy every dip in Tesla, buy everything. Tesla can do nothing wrong. It's always going up. And my point is Tesla can go up. Tesla can go down. If you're fully concentrated in one stock, do you know where your stop is? And if you have to rely on it only going up, that's not trading, that's gambling. And I don't want to see people get wiped out. There's a huge echo chamber out there. All right. There'll be bullish trades, there'll be bearish trades. All right. And long term, we've just triggered something that has, upwards above 70% probability of lower prices. Does that have to happen tomorrow? No. I could see, if the market bounces tomorrow, it's good. We'll take a look at it in 20 minutes when it opens back up. It'll, you have a bunch of stuff, just especially not Amazon, because Amazon actually, with Amazon Web Services and their retail, even though they don't make like money on their retail, with Amazon Web Services they have a very decent business. Other things that are popping like Pinterest, Snapchat, even if on a beat, you know what, longer term they're still going to get roll over and get hit again. They've just been oversold, and so how does, again, this tying with Tesla? Could we see a rally tomorrow? Yeah, especially if the Nasdaq goes up big. So where's the key level of resistance? If you see here on Tesla, it's still, you just see here, I don't even have to draw a line here, about 937. What's it? So 937 is very key. Then above that, I'll be watching for about 960. Also 937. Even if you watch this pop up, watch for the close above the 4-hour rotation zone. So you start to get a close above there, fine. You want a super aggressive entry to buy up on a close above this 4-hour bar, which is 919.50. If you want to front run it, that would be your prerogative. If we are strong in the Nasdaq tomorrow, but overall, it's still in a bearish pattern. I'm just telling people to be cautious. If we roll over again and sell off, the key area is we came down. Let me go to shorter term stuff today. I mean, we had the gap. Let me just review it as well. We had the gap. We had 882.73 to a significant level, 881.48, opening right between there, and then just off to the races. For those that aren't aware, let me shrink this down. Let me switch my cameras too, since I'm focused on my other screen. For those, you take the prior close on a 5-minute chart. You go, in this case, it's to the low because it made the low, and I watch for a close above the 62.5. And then even with pullbacks, target the gap fill. And then it just kept going. Even bucking the trend. By the way, this was a little head and shoulders pattern. And it's from where the neckline broke, and the full target was 911.30, and then ending back at 900 after hours. But that was the first target for this little pattern that ran up, and also a slight divergence with these highs, triggering into a head and shoulders top. And head and shoulders are completely valid with tilted necklines. Actually, tilted necklines tend to work the best, only upward sloping for a head and shoulders. You don't want downward sloping neckline. It does not work, and the probabilities drop way off, so don't trade them that way. 901 after hours. I'm just going to watch, especially strong play tomorrow. Strong Nasdaq tomorrow. We'll be watching for the gap up, and then to see how much it retraces. It would be the inverse of today with the gap down. You're going to do your harmonics. Let's just pretend they gap up, close to wherever it gaps up, and then that high that it makes, and then you're going to watch for the move below the 62.5. If it stays up, you know, it doesn't get a close below that 52.5, especially if it gets that 50 level and rotates back up, it can be a strong play for a continued move higher, because you can keep your stop below 62.5 on a closing basis, 5-minute. Key levels then for tomorrow. Let's take a look at this 905, 906 area, support, resistance. That's going to be my first level, especially we'll watch for that, where we gap in relation to that. Above there, let me just take a look at the longer term levels. Above there, I'm watching still about 915, 916 area. Then the all important, we technically have a trend line redraw off the 4-hour here. I'm going to leave it based off the daily though. Really what the major area besides that aggressive 4-hour buy is 925, a closing basis above there. Then I'd be targeting the 938s, and then above there about 950. Those are my targets. The downside key line in the sand, if we drop back below, we get both sides here. If we drop back below that, I'm really going to be focused on that 900, because there was a lot of, it was key resistance this morning. Then it turned into support, which was broken. and then we close back below it, above it slightly after hours, but back below it. So if we break back below that tomorrow, you're going to have plenty of people trapped who played this run up today. Then I'm going to be watching for selling pressure. Selling pressure, my first area would be to return to this low and the significant level, about 881.50 to 880.34. Below there, 872, then 864, but we got to check that bigger picture with, we still have this gap behind. So we start getting low. This low right here is 862.05. So below 864.50, 862.05, we get a move momentum below that, or at least a close below that. Conservative would be 15-minute to 1 hour close below that. Then I'd start watching for a gap fill. Aggressive would be a 5-minute close with momentum bars. Word on the street now, Snap is the new Tesla. That's wonderful. Snap is the new Tesla. Well, I wouldn't want to be any Tesla. I think we just need to have some sane trading stuff. Well, maybe it's the inverse Tesla. But even with this, you're just going to pile it. This is good. You're going to watch. You want to talk about a gap fill? This will be filled where I bet before the end of the month. That would be, if we're not really going to bet on it, but that would be my guess. Let's see what else we have. Elon is a criminal operating in plain sight. Can't wait for the DOJ to bring hammer down if they ever do. I completely agree with you. But, and that's what, you know what, again, I put this, here's why it's risky. I put this up, but I'll do a whole little Mike's crazy classroom on this. When you are I want people to even look at their portfolio right now, because these are the loss. If you take this kind of loss, whether it be in a stock or a portfolio, these are the gains required to make up the loss. All right. If you take a 50% loss, you need a 100% gain to make up for it. I mean, you see anything, even a 20% loss, you need a 25% gain, but that can be reasonable. That can even be, even if you take a 20% loss in your let's go with a whole portfolio in a year. Yeah, in a couple years, you could get a 25% gain with a couple good years in a portfolio to offset it. But you start getting down into these numbers, look at the kind of gains you need to offset the loss. And this is with your remaining money. Okay, so this isn't putting in new money. This is, all right, let's say I had a $100,000 account and I lose half of it. I have 50,000 left. I need 100% to make that, to get back that 100,000. And I don't think enough people fully appreciate how it ramps up with the gains needed to offset a loss when you take bigger losses. The wins will take care of themselves. I want people, and I'm bringing this up for, as I see too many people concentrated and not really, as Tesla will always go up. And that's what I started talking about. Well, what if something does, like, you know what? What if something does happen to Elon? Whether, God forbid, anything health-wise or anything else, I don't want anything bad to happen to anybody, although I don't agree with some of the stuff he does at all. And, as somebody else said in here, it's a criminal, fine. I can agree with that, even now with other stuff that's come out. But let's say something were to happen. I'm not even talking about that criminal aspect. If something were to happen, Tesla could open the losses you could incur in a very rapid fashion, because it trades around, the cult of personality also, are substantial. And you know what? You can't just bank on Tesla just popping right back up. You can't bank on any stock popping back up. I've seen it too many times. So, if, let's say Tesla drops from 900 to 600. Okay? What percentage drop is that? Let's see, somebody do the math, but, 200, it's over 30%. But even with that, you'd need over a 43% gain to offset it. And let's say you stop trading Tesla, then you're chasing 43% gains to offset it. So I want people to be very careful. And whether you're watching the live stream or whether you're watching, and I don't need comments on this, but or you're just watching a stream and you say it can't happen. Well, I've seen it happen too many times. And you can trade, it was whatever. Look at where things are and the elevated stuff and the kind, look at what happened to Facebook. Okay? Even with its bounce back now with the Sympathy Bounce with Amazon. Well, you can get huge losses and people are always, it's not a loss until you take, until you sell. Well, I've seen plenty of drawdowns that have made people sell, even when they haven't wanted to. So make sure in these kind of environments, and why I'm bringing up more and more stuff on downside risk again, is because I still think the macro environment poses a huge downside risk, especially to high-flying PE companies. This indicative action, especially with today's, with Amazon pops, and then everything else is like, oh, we just have to rush and buy everything after hours. Snapchat up 50% after hours. Like one earnings report, and it changes the valuation 50% in a matter of an hour. You have people just rushing in. And that's why I think a lot of these gaps will backfill. And why I'm bringing this up, because if stuff rolls over or longer term, know where your risk is and where your stops are. If I didn't put this out here, I don't think I would be doing people a world of service in anything with trading or investing if you don't manage the downside and don't manage the loss. Okay? And that's what I just have to say. And I'm going to harp this home. And if people don't want to hear it, if you want to unsubscribe, dislike videos, I could care less at this point, because I would rather have some people wake up and start to manage their potential losses and not just count on everything just bouncing and going up every day. Let's see. This will make this live stream popular. Elon's been getting away with slaps on the wrist from the SEC. Any other CEO will be removed. Well, he was removed as the chairman, but he was not removed as CEO, of course. He doesn't get away with it. Very high-level blackmail is involved. Sean, so much Elon hate. I'm not hating on Elon. Just saying what he does. Twitter is a violation. It technically is. But he's now going and saying, he did have funding secured again. He's going after that aspect again with the whole SEC, that's in violation of settlement too. But I'm not here to litigate. I'm not here. It's why I can't stand the SEC, because I think they're full of crap and they don't enforce stuff. And I'm not talking about Tesla right now. I'm talking about with a lot of companies. So why do we friggin' have it if you're not going to enforce? They go after, oh, this accountant was insider trading and he made $50,000 over 6 years. Literally, you have fraud and other stuff running rampant in the marketplace, and you're going after some accountant who made a couple insider option trades. I'm not saying that should happen either. Insider trading is insider trading, but come on. All right, and my point is, there's so many people who, separate from Tesla again, who are into some of these overvalued high-flying tech stocks. And I even think the Apples and Microsofts will come down to more reasonable PEs again. Okay? But at least they have solid companies. But there's a lot of crap out there that a lot of people are going to get burned in, and too many people have the buy the dip mentality, the everything's going to go up. They don't know where their stops are. They have poorly concentrated or over-concentrated portfolios with not enough diversification, and they're not managing their risk properly. So that's why I'm showing that spreadsheet, because I would rather have people, if you're going to unsubscribe, fine, at least take one thing away. Some idiot on YouTube who's been in this friggin' industry for over 30 years now at least told me to watch my stops, and that if I lose too much, it's harder to make it back because I have to make oversized gains versus the amount I lost. If that's the only thing you take away from this channel, hooray. Good, you learned something. All right? I'm not going to mess around anymore, because there's going to be people hurt, and I'm really getting pissed off at all this constant pumping by, like, at least have a fiduciary, especially from fund managers and some of these analysts and everything else that, I mean, come on, you have no fiduciary responsibility with what you're putting out on a daily basis and the crap you're spewing to people who, a lot of them don't know any better. And I'm not saying that ignorance gives you a pass for anything, but you know what? This is why I'm gonna say the tough stuff out here, because at least wake up. At least know where your losses are. At least know every stock can't go up all the time. And at least know markets have two sides. And the Fed isn't always going to be there. Everybody thinks the Fed will always be there with the Fed put. At some point, things will shift. And I don't know what that trigger is going to be. But again, growth stocks, value stocks, I've been talking about this in market overview. You will have rotations. You will have shifts. High-flying PE multiples will collapse at some point. Everybody says this time it's different. I've been through so many ups and downs in these markets in 30 years. There's been different content, but there's nuances that are different, but the overall stuff is not different. Oh. Well, so I don't know I don't know. This was a comment from way before I just went off the rails. People are used to stuff going up for the past year. They forget to manage risk. That's the reward. If you're in good positions, even probabilities, we've talked about this the last few days. Look, you can have losing trades with great probabilities. Okay? I'll take Tesla. There's a over 70% chance we see much lower prices. Does that mean it's guaranteed? No, there's a 30% chance it could be wrong. A slightly under 30% chance. Okay, but I'd rather be with the 70% than the 30%. Does that mean it can't go? Can it go up? Sure. Can it go to new highs? Sure. At some point, the pattern will be invalidated. Well, when that happens, fine. But you got to trade the probabilities and manage your risk. The rewards take care of themselves. The probabilities in the long run take care of themselves. Even if you flip a coin to have 20 heads in a row, does not mean there will be heads forever. You could then turn around and get 20 tails in a row. Is it likely based off of probabilities? No. But each coin flip is an independent probability. Let's put Martha Stewart in jail. Based off today's marketplace, that was the biggest joke. Martha Stewart, yeah, she did something wrong. But you know what? Based off what's going on now, again, I'm not talking anybody in particular. I'm talking broad market because there's a lot of crap out there. Well, I'm glad some people appreciate this. And if you don't, then that's fine too. I'm just not going to sell. I'm not ever going to sell somebody a bill of goods. You're not going to see videos unless they're completely sarcastic. Says the 100% guaranteed indicator. I've seen too many videos. People are texting me stuff. And literally the people put up a YouTube video showing, oh, this is 100% win rate in 2 months. I can back test systems with, it's called curve fitting. Look it up. I can even come up with 10-year back tested systems that have 0 losers. You know what that means? It means it's going to be a disaster in the next few years because curve fitting doesn't work. Forward test it. But anybody can pump out a video that says, oh, look, you follow this, 100% winners. And you're even going 2 months. Who gives a crap? You won't see that kind of crap on this. Sorry, I didn't mean to almost swear. You won't see that kind of crap on this channel. Dip buying is ingrained in some yen. I showed a chart even during market overview. Everybody's still, I'm going to go more in stocks. I'm going to go more in. It's until it doesn't. Oh, top shelf rant today. There we go. Is anybody still here? Can you discuss your formulations of your 70% down? It's based off of the weekly double top pattern. Weekly double tops have a very high percentage of probabilities. So I'm going to go with that. Again, I know where it will be incorrect, and if it's incorrect, then great. Does that mean I can't take a bullish trade? Not at all. You can take bullish trades all day long. We can have bullish trades and then roll over. Just because that is a huge pattern. That could take weeks or months to unfold. Does that mean you can't take a bullish trade? No. But even I'll say this because there's a lot of people I know that got their face ripped off as short in Tesla too. So here's the deal. Whether you're a bull or a bear, you have to manage your risk. All right, so just because there's a 70% downside, you bet the house. You go, my house was paid for. I'm now getting a new mortgage for my house. Let's say it was $500,000 house. I'm taking that $500,000 and I'm short in Tesla. Do I think that, okay, fine, I have a 70% probability of low. Is that prudent? Is that managing risk? No, you just took $500,000 and put it all in Tesla to the short side? I think you're insane also. That's not managing your risk. You know, the only way you should be trading $500,000 either way is if you're worth tens of millions in one stock. It's not managing risk to the upside or downside. Manage your friggin' risk, people. This is why and guess why I'd never be on TV? I'd be like the anti-Jim Cramer, okay? People would tune me off in about 15 minutes. Oh, that guy, there he goes on a rant, not telling us where the winners are tomorrow. He's telling us to manage our risk. Well, let me change the channel. What's on the Weather Channel? That would be my show. You're welcome, Sailing. Shortest TV show in run history. Didn't even last a full episode. They keep listening to these analysts who keep bumping price targets. And don't get me started on that either. So, I was seeing comments disappearing. I've probably pissed off the entire viewership now. Besides a couple of people. At least it will be real. Oh, it will be real. I'll get really... It wasn't really a meltdown. It wasn't a meltdown. It was just enthusiastic. Can we call it enthusiastic? Thank you a bunch. Did not piss anyone off. I just want people with these kind of markets again, and I'm not going to get started again, but please manage risk. Please, especially in Tesla. Whether you be shorting or going long, please manage risk. And please manage portfolio risk. And I'm going to do some either live stream or Mike's Crazy Classrooms also on portfolio stuff to try to show people right and wrong ways to do it. Just so I would rather have people, you know, survive. And I'm not being doomsday or anything. There's going to be a pullback. Whether it happens this year, whether it happens next year, there's going to be a substantial pullback at some point. And I want people to be around after that fact. Intact. Even if you take, look, 20% loss. 20% loss. Hey, I can come back. I took a 20% portfolio loss. Oh, okay, I need a 25% gain. I can manage that. I can manage that versus, oh crap, I took a 60% loss. I need a what? I need a 150% gain. I need a what size gain? What size gain is that to offset my 60% loss? That's what I want to avoid. With that, where do I sit tomorrow? If the NASDAQ's strong, I'm going to be watching for some upside price action in Tesla. Again, non-farm payrolls tomorrow. I still think, as other people don't think it'll have something to play, I think it will create, especially for rallying, I think it's going to be a miss. And I think it will either even exacerbate the rally more, but we will see. I'm not here to predict that. I'm going to be watching it. I'll try to do a live stream 8 a.m. We'll start the countdown tomorrow morning, and we'll just take a quick look at the NASDAQ. We can peek at Tesla. We'll look at the S&P, the Dow. We'll see what the 10-year is doing, and we'll prepare ourselves for trading on non-farm payrolls tomorrow. So if you want to and you don't have anything better to do to prepare for the open, then please consider joining me. And you guys, with that, have a great night. Have a fantastic night, and I'll talk to everyone.